joining us on PhillipCapital's Market Watch. I'm Sylvia, an equity specialist from Phillip Investor Center. Today, I'll be sharing with you some of the key takeaways from the local bank's first quarter earnings results. The first bank to release its results was DBS. DBS has announced a 72% increase in net profits year-on-year due to strong growth in loans and deposits. Its asset quality has also improved, and the wealth management business has brought about record fee income. The growth in treasury markets has also contributed to higher trading income. However, the bank has recorded a lower net interest margin due to lower interest rates and written back a larger allowance from its general provisions of $190 million. Moving forward, DBS is looking to maintain a stable dividend payout and grow new platforms. On the other hand, UOB has announced an 18% increase in net profits due to growth in its wealth management and loans business, for which the fee income increased by 24% year-on-year. It has also recorded smaller impairment charges, which fell by 29%. Similar to DBS, UOB's net interest margin fell year-on-year due to lower interest rates, but it is still steady quarter-on-quarter. The results are also boosted by a higher net fee income and lower allowance write-back of $201 million. The bank is expecting a 50% payout ratio to resume when the dividend cap is released, boosting investors' sentiments on potentially higher dividends. Moving forward, UOB is looking at improvements in its office space and sustainability efforts. It also aims to grow its business in the ASEAN and Greater China market. Lastly, OCBC has recorded the best earnings result, with its net profits more than doubled that of last year's. This attributed to an improved earnings from all its subsidiaries and the Great Eastern Insurance arm, which contributed to 20% of its group's net profit. The growth of its wealth management business also contributed greatly, with a 59% increase in wealth management income and the growth of its private bank's asset under management. Similar to UOB, OCBC has recorded smaller allowances in the quarter. Furthermore, the bank has recorded higher non-trading income from its fees, trading and insurance income. OCBC has shown resilience in its asset quality, with a steady net interest margin and stable non-performing loan ratio. Moving forward, the bank will be focusing its business on Greater China and ASEAN market, together with growing its wealth management business and optimizing office space. In conclusion, we can expect the future outlook of the banks to be positive, as we saw that all three banks have shown great earnings results, which are mainly attributed to growth in wealth management business and improved asset quality. This will boost investors' confidence in economic recovery, and the banks are well poised to grow further as they are looking forward to expand their businesses in ASEAN and Greater China markets. As the economy recovers, we may see a possible uplift of the dividend cap by MAS, which could potentially bring about higher dividend payouts to investors. However, the threat of the resurgence of COVID-19 cases will dampen the economy's recovery progress. We saw that the Straits Times Index fell more than 2% when the new lockdown measures were announced due to rising community cases and unique cases this month. This would impede economic recovery in Singapore and hence the declining stock prices. As such, we will need to exercise caution, and investors can look to accumulating the stocks at a dip for longer-term prospects. Well, I hope that you have enjoyed this episode of Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. You may also leave your comments to share with us on your thoughts. Thanks for joining us and see you soon.